The biggest institutional hype in Wall Street history just officially closed its doors, and it is creating a massive liquidity shockwave across global markets. According to official reports just dropped by Reuters and the Wall Street Journal, the SpaceX IPO is a staggering 4 times oversubscribed. While Elon Musk and Wall Street insiders aim to raise $75 billion, institutional demand has skyrocketed past $250 billion. Even BlackRock, the world's largest asset manager, has officially placed a massive $5 billion order. Now, if you watched my previous video, you know the exact mathematical and fundamental breakdown of why this IPO at a $1.75 trillion valuation is fundamentally not worth it, based on their balance sheet and massive trailing losses. And I still stand by that. Wall Street knows it's overpriced, but they don't care about long-term valuation right now. They care about short-term volatility. This is no longer a standard stock listing. This is a massive global liquidity drain. In this video, I will prove to you with raw institutional data how this $250 billion hype will impact Bitcoin and Forex markets tomorrow, and exactly how you can trade the ultimate capital refund rotation into gold and BTC. Let's analyze the mechanics of what happens when the ticker symbol SPCX officially debuts on the Nasdaq tomorrow. Because the IPO is 4x oversubscribed, there is a massive institutional shortage of shares. Thousands of hedge funds and retail traders did not get the allocation they wanted. This extreme demand versus zero supply means only one thing for day 1 and day 2, an aggressive, artificial momentum pump. If you are a momentum day trader, the short-term trend is undeniably bullish. But do not get trapped into buying this for the long term. As we proved in our last breakdown, SpaceX is trading at over 94 times its trailing revenue while carrying billions in net operational losses. Once the initial institutional FOMO cools down after the first 48 hours, smart money will aggressively take their profits. The hype will fade, and the price will gradually correct downwards. But as professional traders, we don't care if a stock goes up or down long term, we care about where that massive ocean of money goes next. This brings us to the ultimate secret of Wall Street that 99% of retail traders completely miss, the refund process. Think about it. Investors threw $250 billion at SpaceX, but the company is only accepting $75 billion. What happens to the remaining $175 billion in cash? It doesn't disappear. By Friday evening, Wall Street clearinghouses will officially refund and return that massive pile of excess cash back into the accounts of institutional investors and hedge funds. Now ask yourself a professional trader's question: will BlackRock and global macro funds just let billions of dollars sit in idle cash over the weekend earning zero interest? Absolutely not. They are legally forced to deploy that capital. And because the stock market is heavily overvalued right now, they are going to rotate that refunded cash straight into deeply discounted, hard macro assets. Specifically, gold and Bitcoin. Let's jump straight into the charts to look at the data. Look at gold right now. Over the past week, gold has pulled back sharply, hovering right around the $4,000 area. Why? Because global institutions were aggressively liquidating their safe haven positions to raise cash for their SpaceX IPO bids. But notice this massive, historical support zone between $3,800 and $4,000. This is a heavy institutional accumulation block. As that $175 billion of refunded cash starts hitting institutional bank accounts next week, a massive portion of it will flow directly into gold as a macro safe haven. With major central banks still easing and global debt rising, this temporary pullback is giving us the ultimate discount. My macro price prediction for gold remains heavily bullish, targeting $5,400 to $6,000 by late this year. This support block is your primary loading zone. Now let's look at Bitcoin. The exact same institutional manipulation has been playing out in the crypto space. Over the last few days, we saw significant institutional outflows from spot Bitcoin ETFs, specifically from BlackRock's IBIT. Why? Because they needed to free up $5 billion in liquid cash to place their SpaceX order. This artificial selling pressure has dragged Bitcoin down to the $59,000 to $61,000 area. Look at the chart, this is a textbook psychological and technical bottom. Once the SpaceX listing storm settles this weekend, BlackRock, and other massive crypto-native hedge funds will look at this massive discount on BTC and immediately redeploy their refunded IPO cash back into the crypto market. Expect a violent capital rotation right off this 60K support block, which will likely trigger the next major leg of the crypto bull run. Here is your actionable trading game plan for this weekend based on raw institutional data. For Forex and commodities, focus heavily on gold. Look for strong reversal confirmations inside the $3,800 to $4,000 zone for swing long positions. For crypto, accumulate Bitcoin spot or look for long setups near the $60,000 support. Additionally, watch Dogecoin closely. Elon Musk hitting trillionaire status with this IPO is a classic. Buy the rumor, sell the news event. Expect a sharp crypto profit-taking dump on Doge once the listing goes live. Remember, listing days create historical market volatility. Keep your leverage low, use strict stop losses, and protect your capital at all costs. If you want to see the exact structural and revenue breakdown of why SpaceX is fundamentally a dangerous long-term investment, click on the video on your screen right now where I analyzed their entire balance sheet. What is your play? Are you chasing the SpaceX hype, or are you waiting to buy the bottom on gold and BTC? Let me know in the comments below. Stay disciplined, trade safe, and I'll see you in the next analysis.